Let's take a look lastly at MTN and Vodacom's valuations now. Right at the top of the show, I said Vodacom price to earnings ratio of 15.5. We've got MTN sitting at 15.2. Pretty close there, and looking relative to the Aussies PE, seeming to be fairly priced.
Yeah, and if you look at the trading statement that just came out from Vodacom as well, I think that was last week, and said the numbers are going to look about 20% better. So that bodes well for them. That puts them, I think, in a full year 11.7 or let's say 12 PE, which is very cheap comparatively against the Aussie, which sits at a 16 or 17 PE currently, and probably a 15 forward PE. So these do look very attractive. And MTN had a bad year last year. There was some currency write-offs that they had, a few other impairments. So they're probably looking at a similar result than you're looking at Vodacom at the moment. They also, if you look at the analysts, predicting about a 12 PE for the full year. So dividend yields of 6 and 7 going forward, certainly better than you would find in the property market, even better than some of the bond markets at the moment. So, yeah, we do think that there's very attractive valuations on these two
Paul,
companies.
I mean, where you're looking at fairly priced valuations at this stage of the game, if you're pricing in the growth story that you've been talking about, it looks even better.
It does, and if you look at the charts there, you can see that's a 5-year chart of Vodacom. There's been this fall back from around 130 to around sort of 105, 110 recently. It did correspond with some quite big dividends being paid. MTN had a similar thing, you know, right up around 180 plus, and then they've fallen back down to sort of 160 thereabouts, not quite as big a fall. So we think these are attractive entry levels. We know that emerging markets have severely underperformed developed markets this year, which is probably a function of global equity asset managers seeing that the US economy is recovering, maybe I should rush home and buy those shares. But at some point, that's going to reverse. The currency issues will stabilize, people will get more positive again. And when they come for these stocks, because they can see their scale, they can see their good corporate governance, they can see the good, you know, accounting practice, the multi-country, diverse kind of thing. And, you know, it's a growth story people are very familiar with in those developed markets.